particular target, but we have had some ballpark figures on current accounts.
Yeah, so if we look at the end of our projections, we see the TWI moving to the range of about 60, and that we think is a long-term average, which will help stabilise the current position in terms of New Zealand's net foreign liabilities. Of course, if you wanted to unwind the build-up over the last 5 years, you would need a position of an undervalued currency for about the same length of time.
Supplementary on that, could that projection be influenced by further changes in things like foreign investment laws, strategic assets, and other rules by government, potential purchase from offshore? Could that affect that?
Well, at the margin, but you'd need to see it having quite a significant effect. I would have thought those things tend to impact marginal investments rather than the core.
There's also sort of flow out towards destination.
Have you finished?
Sure.
Going back to 2007, the Reserve Bank expressed concerns about the effectiveness of the OCR as the only policy instrument, and that's given a high share of mortgages on fixed rates. Has that changed now that the proportion of fixed rate mortgages has changed, or is it still, in a sense, wanting to explore some form of complementarity between the OCR and other potential tools?
Yeah, at the minute the proportion has changed quite significantly. There is a lot of borrowing done, not necessarily so much on flexible, but on very short-term rates. Again, Simon, do you have a proportion?
Yeah, a year ago, only 10% of mortgages would have been floating rate. Now they're 20%, and of the 80% that are actually fixed rate, a lot of them are shorter. So we're talking about, most of them in the 1 year. So the OCR will have far more bite now than it would have had 07, 06, when you had a far longer tenor of the average mortgage.
So just linking that to an ongoing conversation we've had in the FSR context around the evolution of prudential policy in that space, if you like, between pure prudential and pure monetary goals, that complement each other. And the recent investigation of core funding initiatives. Do you think that new liquidity requirements could be used in such a way as to take some pressure off the OCR? That in a sense is counter-cyclical use of that still a possibility in the current?
Yes, at the margin, but we don't want to overpromise on that. So we have done a bit of work looking at the core funding ratio, which is the key part of the liquidity policies, and projecting what that might have looked like over the last 5 years if we'd had that in place. And it looks interesting enough for us to want to look further at it. But that's more in the nature of an automatic stabiliser. It's not a highly discretionary short-term sort of tool.
Are you also looking around for potentially other automatic stabilisers?
Well, we're always looking. We're doing a little bit of work on capital adequacy ratio movements at the minute, but we expect that would be rather less useful. The core funding ratio looks the most useful to date. But we've got to do this in the context that the world is, or rather the G20 nations through the Basel Committee on Bank Supervision are coming out with their recommended international moves right at the moment, and we're expecting to see push to liquidity policy roughly of the sort we're talking about, countercyclical capital, where there is some thought that internationally there might be better ways of dealing with these things, but I guess we've got to really look at that quite carefully, and dynamic provisioning, which would generally help as an automatic stabiliser.
Yeah. Would it be fair to say that represents the evolution of the micro and international consensus around the balance of monetary policy instruments?
Well, a lot of it is driven off a desire for better prudential supervision of individual institutions, and that's where the powers are in most cases overseas. But yeah, there's certainly increasing interest in whether that can fill a gap between supervision of individual institutions and stabilisation of a macroeconomy generally.
And would it therefore be a fair extrapolation to, or not, to say that if one were to adopt a policy that there were no room for evolution of the status quo in terms of the basket of policy tools, that would increasingly not represent the international status quo or the international mainstream.
Sorry, that was a triple negative. Could you rephrase that for me?
If the international consensus is moving towards a broader basket of potentially complementary tools which lean against the cycles of improving prudential supervision, and if one were to take a position perhaps not to investigate that or not to act on it, would it be fair to say that that would be moving progressively away from the international mainstream?
Well, there's two classes of policies coming through. Some of them, frankly, don't look like they're that relevant to Australasia. There are things like leverage ratios, stuff on remuneration and other things. But there are some that do look very relevant, and as I say, liquidity policies and maybe counter-cyclical capital and certainly dynamic provisioning. The world sort of banking regulatory community has got to decide what it considers as important for most first-class country bank regulation in the form of like a Basel III or something like that. Yet to see quite what's in there. We'd certainly be expecting to look at those and stay in line where relevant.
Last one. I understand from the press conference this morning that when asked whether the bank was talking to the government about its fiscal and tax policy preferences, you indicated that yes it was, and the government had been generally receptive. Could you give us a bit of detail about particular policies that government did?
Oh yes, I mean I don't think that should be taken as any particular change in what we do. I was very careful to state we talk to the government in exactly the way that we always have, which is a couple of days before the forecast, before the monetary policy statement, we talk to them about the forecast, but we don't talk about the decision. And in that context, we've made it clear what our views are on the broad tax area, but we've declined to go into detail. It's not, we don't have the expertise, it's not our role to do that. That's for government to
It was more around the tax area than the monetary prudential area.
Yes, but certainly we've kept in touch, we've kept the Minister in touch with developments in macro financial instruments internationally and where things are going in New Zealand.
Okay, thanks. A few quick questions here, then yes, Russell, and then David Parker. Just a quick one from myself. What was your forecast for the unemployment labour market last MPS? You got 6.6 for 2010 now. You come back to me, I just was nudging through 7, and how does that translate into the number of jobs?
So we had a peak, I'm pretty sure it was 7%, but
I think it was.
It was around about there. The current projection translates to, through the recession, there would be about just under 60,000 jobs lost, and I think so far the number is about 55. So most of the job losses from the recession would, we think, have occurred.
Hopefully we're through the worst, eh? Okay, thanks.
Yeah,
David Bennett.
Maybe I'll just clarify. The number was 6.8 to the March 2010.
Yes.
And then we don't publish it into quarter, and
it's rolling. Yeah.
It just sneaks up to about 7.
Okay.
So we actually printed 6.8.
Right, okay, thank you. David Bennett, Aaron Gilmore, Russell Norman.
Okay, guys, with the residential housing market, you're seeing it sort of possibly peak early next year. Do you think it's sustainable that banks will still be tight coming out of that period, and do you see any risk in that time when post that peak we sort of see a decrease in prices, more newer houses come on the market, and that what do you think would need to be done to stabilise those banks, the bank